Your words mean nothing when your actions are the complete opposite. Good evening and welcome. This is Face the Nation. Our topic of discussion today is to look back at the year as well as the future with an emphasis on the country's economy. Joining us this evening on the show are Dhananath Fernando, CEO of Advocata Institute, Dhanusha Gihan Pathirana, economist, Maxime Wickramasinghe, Director Marketing, Thema Collection, Sean Van Dort, Chairman, Shippers Council, as well as past President of Chartered Accountants Sri Lanka, Sujeewa Mudalige, joining us this evening to pose questions from our panelists this evening. On to my immediate right is Shihar Ranis, on to my immediate left is Nadim Majid. You too can join in as far as the conversation is concerned, so you can send in your messages via WhatsApp, 076 656 5353. Is the number once again, 076 656 5353. That's the number to send in your questions to our panelists this evening. We would be delighted to take those questions to our panelists as well. So let's get the ball rolling with Dhananath Fernando, CEO of Advocata Institute. Now, Dhananath, just a couple of months ago, we were talking about the pay tax. We had several representatives from the NPP who stood on this very show and said that the threshold will be increased from 100,000 to 200,000. There would be a spread between 500,000 rupees to 750,000 rupees. What is happening? 100,000 to 150,000. The question that I have to ask you now is, Deng Satutuda, Deng Sapada.
Shamir, it was said the issues are real. People had high expectations, but politics is the way that you imagine on solving those issues. But in my view, regardless of, I think politicians make promises, but the reality was written. The reality was we could not move beyond the demarcation of the IMF program. It was anyway determined. There is no room, I'm not saying it is right, but it was, I mean, if you look at the numbers, there was no room for a lot of adjustments. In that sense, I think rather changing too many things, while it is probably breaking the promises of what they promised, which is not my forte, which I think the party has to respond. But on someone who's looking at the economy, I think there's good and bad both. The good would be there are not too many there are not too many changes. They haven't changed the VAT rate, they haven't changed a lot of those serious taxes. So they have at least kept on the same framework, which is very good, because otherwise we are completely out from the game. The bad is, I think, even on the 150,000, I understand they promised to increase it for 200,000, but the challenge would be our promise was to increase the tax net, but now the direction was opposite. As you said probably in your opening remark, what we promised was to increase the tax net, but by bringing down the tax rate, we are basically contracting the tax net on one side. That's number one. But again, it doesn't mean that people are having a good time. Since you asked, like, it's Sapada, Satutuda, definitely not. People are still having a difficult time. We are still not out of woods, but we have to compare with the next alternative. If we do drastic changes, if we deviate completely, the next alternative is a worse alternative.
Right. So, Dhananath, we understand what you're saying. We understand that the government has to stick with the IMF. However, these were not the promises that were given at the political fora at the presidential election and the general election. We had the three economic council members of the NPP on this very show just a week prior to the elections as well, and they all said that the pay tax threshold will be increased from 100,000 to 200,000. They said the gap between the pay tax levels would be increased from 500,000 to 750,000, but nothing of this sort has happened. Now look at President Anukumar Dissanayaka's statement today in Parliament. He goes on to say that those who are getting 150,000 will now be taxed free, Those who are getting a payment of 200,000 will be free of a 71% tax. 250,000 will be free of a 61% tax. 300,000 will be free of a 47% tax, and a 3,500 rupees who's earning will get a 25.5% tax free. Decode this for me, Dhananath, because I'm trying to figure out what these measurements are. I don't understand. Please appraise our viewers today as to how this is going to come into effect.
So basically, in terms of the pay taxes or the APIT taxes, what they have done was basically earlier the tax-free threshold was about 100,000. Now when they have increased it to 150,000, so anyone who earns 150,000 rupees, no need to pay taxes.
Right, okay, understood.
Right?
Okay.
And then if someone earns, let's say, above that, let's say up to 233,000, from 150,000 to 233,000, there's a gap of like 83,000.
Right.
So 150,000 is free from the taxes. The balance is taxed at 6%. So if someone who is earning a 233,000 salary has to pay about 5,000 rupee taxes.
Okay.
Because that's only that 6% is taxed to that incremental from the 150,000. And let's say someone earns 275,000, so 150,000 minus 275,000, that bridge, that gap is taxed at 12%. So basically from up to 233,000 is at 6%, and the balance from there onwards to 275,000 is taxed at 12%. So that will add another 5,000. Imagine if someone earns about like 316,000. So from that 275,000 to that 316,000, the balance 41% is taxed at 18%. That will add another 7,500. If someone earns, let's say, 358,000, so from 316,000 to that 358,000, that balance 41,000 will be taxed at about 24%. That will add another 10,000 rupees. So altogether, just to, I think, what people are concerned about, what is the additional tax saving that I'm going to get with this revision. So someone who earns about 150,000 will have that saving. It will be completely tax free. If someone earns, so there will be a saving about 3,500 rupees if someone earns about 150,000. If someone earns about 250,000, we'll have about a 14,500 saving. Above that, there's about a 30,000 saving.
So compared to what we had, how different is this?
The difference is there's about a for the upper threshold there's about a 30,000 saving maximum. That's the maximum limit. Afterwards, I mean, just because your salary increases, you don't have a big saving. You only have that. They have kept that 30,500 saving as constant above 500,000. The saving, the tax saving above that, even if you earn 1 million or 1.5 million, the maximum saving of the tax compared to what you paid earlier is maximum 30,500.
So right now, as you say, they have dressed the bride very well. It's just the results are not really different.
I do not want to comment on that, Shamir, but I think there's a famous saying that politicians say the things that people want to hear before the elections. So I think when we look at I think as analysts and as professionals, our job is to show the entire picture. But one more comment, if I have 1 minute, I think I said the good thing, they didn't derail, but I think that I will also bring the bad thing. The tax revision on the services from 30%, the corporate taxes from 30% to 15%, I do not recommend that. Not because that I have anything against the IT sector or anything, but it will create an unlevel playing field. Now, for an example, the services sector, let's say Sean owns an IT company, so he has an advantage of saving 15% corporate tax. Let's say I'm in the manufacturing sector. Now Sean has an advantage to pay employees an additional salary than my employees because he get a 15% tax break. So it will affect my business, like the guys who are in the manufacturing sector, because he gets an added advantage. In economics, you're doing something is also you're not doing something. So when someone gets a relief, someone else has to pay for it. So my worry is when you get that export services sector, which is welcome, I'm not saying it's a bad thing, but it has an impact on the rest of the economy.
Dhananath, very quickly, just for us to understand, when is this new tax going to be implemented? Is it going to be the 1st of April 2025 that we are going to see these changes coming into play, or is it are we going to see this immediate, probably on the 1st of January?
I really cannot recall, Shamir. I think it's from the 1st of January, if I am not mistaken, but I would like to correct myself.
Okay.
I will check and get back to you on that.
Thank you very much. Dhananath Fernando, CEO of Advocate Institute. I'm just going to break the cycle a little bit and move to Sujeewa Mudalige, past president of Chartered Accountants Sri Lanka. Sujeewa, you've said that the government has to just follow in the right footsteps and everything will fall into place. Is this following in the right footsteps? And you, as someone who has come on the show and been very vocal, I just want to understand, promises versus actions. There is a stark difference at the end of the day. How do you think the people are going to view this in the longer, shorter, and the medium term? Your time starts now.
Yes, so thank you, Shamil, for inviting me again. So if you look back, say the last 2 months, so I think President has been in office for 50 days?
Approximately.
Yeah, approximately, right? So, I mean, if you start ticking the boxes, I would say, I mean, he's done a pretty reasonably good job so far during these 2 months, you know, on some of his appointments, the fact that he has not derailed the IMF program, concluded the debt restructuring, didn't change some of the key bureaucrats. I mean, there's a lot of good things that he has done. So you need to give credit to President AKD, right? And also, if you look at, I just want to add something that Dhananath said, right? I mean, his hands are tied to some extent. The reason is, by the time he assumed office, you know, this deal, this agreement, this you know, has been already virtually done. Only thing that was not done was signing on the dotted line, right? And there was very little room for him to maneuver and change within the short period of time, because if he did that, I mean, the repercussions would have been absolutely severe. So because of that, if you ask me, I mean, some of the things that have been agreed on this IMF program, I mean, the biggest issue is on this DSA, you know. But the fact is that President Wickramasinghe, when he left office, I mean, he had agreed to a particular framework, and there was, I mean, in my view, President AKD hardly had any opportunity to negotiate on it, because if he started doing that, our fourth tranche would have got delayed, the credit rating would not have happened, there would have been uncertainty, the creditors would have been extremely unhappy because this has been going on for a while. I mean, we defaulted in 2022 April, we are now getting into 2025, we are almost 3 years gone, right? So there's a huge amount of, I mean, the price to pay would have been, I mean, I can't even, I don't want to even think about it, right? So because of that, I mean, I would say he has done a pretty good job so far. And also on some of the tax reforms, I just want to add on some. I think most of these are going to be effective 1st of April, right? 1st of April. And also, just to add something on to what Dhananath said, see on that, see what was there right now, Shamir, is that the export services of certain sectors were not liable for income tax, like IT, BPO, and then some other shipping services and so on, right? Now they have been brought in at 15%. So it's not an exemption, so it's actually additional revenue to the government on this, right? The IT companies, BPO companies, and anything else. The service sector, some of the sectors which were exempted is now been brought in. I think what people haven't realized is that, as Dhananath quite rightly explained, the concession being given to the lower segment of people, right? And the maximum benefit that you would get, there's two schools of thought. Some are saying it's 30,500, some are saying it's 20,500, Even if you're getting 10 million, your taxes will go down only by that amount, right? It's either 20, some people are saying it's 20,500, but some are saying it's 30,500. So that's a good thing. So there is no concession given to people like you, Shamil, who are on the higher income brackets, right? So your taxes are not going to come down. So there, I mean, you can't celebrate this. But the biggest revenue earner on this is actually the increase in the withholding tax from 5% to 10%. Do you know last year, Shamil, tax on interest was almost 150 billion. Tax on interest, right? That was almost the same amount, but you and I paid as personal income tax. Personal income tax was also only about 150 billion. Tax on interest was about 150 billion. So this is a big ticket item. And what has President AKD done? He had doubled it from 5% to 10%. So there's a lot of people out there who are not paying any taxes on their interest income, right? But now you have to go to the banks and then say, look, you are below the threshold, I need an exemption. But if not, you will be there will be a 10% withholding of on your interest income. That's a big ticket item.
Right. So I just want to understand, Sujeewa, now, what happened before was the banks deduct 5% from your interest income.
Yes.
So this is going to go up by 10%.
Correct.
And if you are going to be paid over 36, if you're paying the government 36% tax on payee, you will only have to pay 26% on your interest income when your declarations are made.
So it depends on which slab you are falling on to, but you can deduct this. You're right, because this is an advance payment of tax, right? So this is a big revenue item. See, don't forget. See, under the framework, we have to hit 15% of revenue by 2025. From next year, our total income has to be 15%. And 3 years ago, we were at 8. So we are doubling our revenue, right? Within a very short period of time. 2022, we were 8 point something.
Now we'll get back to all this.
Right. So my point is, with the concessions that President AKD is giving, he is not depriving the government of its revenue, because this big ticket item on this, and also he's allowing motor vehicles to come. Right.
Very quickly, Sujeewa, we'll come back to all this momentarily as we go along. But just for me to understand, if the interest rates in Sri Lanka comes down below 5% as projected by many economists right now, you are trying to tell me that if you're paying 10% withholding tax, you're only going to earn approximately around 3.5% at the end of the day from any interest that your FTs are going to give you.
Yeah, so if you are at the highest threshold of 36%, you will get 1/3 will be gone.
So automatically,
at 5% you will get 3.5%.
Yeah, so automatically you will put your money into the equity market, which is a stock market in Sri Lanka, which would give you approximately around 10 to 12%.
No, see, if you look at it so far, the first 11 months, right, the market has done extremely well, and the index now is about 14,500.
Approximately,
right?
yes.
So that's also, so to be honest, that's also because of the stability that is there, right? Exchange rate is stable, interest rates are down, and so many other factors are impacting the performance of the stock exchange. And also you need to keep in mind, the gains from the stock exchange are tax-free. So you need to keep in mind as well. So even if you get a 10% return, so when you add up, if you're on a 36%, you're technically getting 13-14% return on this. So at the moment, difficult to complain, because your inflation is down,
Sujeewa,
interest rates are down,
government regulated casino.
You can't say that. See, I disagree with you. See, in my view, stock exchange is the best example of where wealth is created.
Okay. We will come to all this, Sujeewa, momentarily. I now want to move my attention towards Sean Van Dort, Chairman of the Shippers Council. Sean, the last time you were on this very show, we spoke about the customs. You said it's important to digitize the customs at the moment, and the government has a vision. They have brought in Dr. Hans Vijayasuriya to the limelight. He's going to play the role of the government's strategic vision in terms of digitization. However, the customs officials seems to be very reluctant to go ahead with this digitization system. We saw when CCTV cameras was to be installed, there was hue and cry within the customs department not to do this. As an individual who has championed the digitization of customs so far, how do you view all these developments despite the fact that a new government has come into play, promising change that was envisaged by the people in 2022?
The booths of the government changed, but the bootlickers remain the same from every government to this government. Successive governments and this government, I feel, still do not possess the backbone, or possessed or now possess the backbone to make changes in the customs. Customs is a hellhole. They can make or break a government if they want to, because 20% of government revenue comes from customs revenue collection. And out of that, there's another grey area which has contributes for about 10% that goes into the private individuals of customs. So that's a huge amount of money circulating under the radar. Digitalization will take that away. The draconian way of working with customs is they put minutes on the documentation, import documentation. Those documents, copies, go missing. So there is no traceability. Digitalization will bring traceability, where their comments are made on the system, where their findings are made on the system. There's nothing like that. Corruption is the key in stopping digitalization. No customs want digitalization. Partial digitalization is there, just as a post box for us to submit our documents. That's it. Rest of the ground.
But Sean, now things change. Now there is a new government. Now President Dhanusha came into power. 159 members are with them in Parliament. I'm trying to figure out, are you being biased towards someone? Because now things have changed, isn't it?
Change was in the air, but physically it has not affected us. The air quality also has dropped, right, today? So basically, government has changed. What are they doing? I mean, you look at Parliament today, they are more busy clearing their credentials than taking the country forward. Tell me anyone who has spoken about customs rehabilitation and increasing the revenue at the Parliament up to now for the last 3 months. In politics, there is no honeymoon. What happened to the previous presidents will happen to this government also if they don't pull up their boots and take action against it.
Sean, you also represent somewhat the apparel sector in Sri Lanka as well. Now, the volatility in the exchange rate, in your opinion, how has it affected the exporters overall in this current context?
Budgeted at a certain amount and a reduction is definitely going to impact us. But I think the apparel sector is very resilient. They will.
There is a 5% growth as well compared to last year.
Not on dollar, on piece-wise. The margins are going down to single digits. But still the apparel sector being resilient will definitely searchlight inward and reduce the waste out of the operation to be more compatible in the market and to make increase their revenue. So apparel sector is really hit because what we had budgeted for our export gain is no more, not a gain, now it's a loss. So it will be left to the big boys in the apparel sector to take action and support the SME sector as well.
So also, Sean, there is a major lobbying that is being carried out by most of the export companies on this SVAT scheme because the 18% is going to be implemented for anything that is being sourced in Sri Lanka. Is that something that the apparel sector is looking at, talking to the stakeholders and trying to be lifted? Because right now they say that it has been extended for another further 6 months. However, nothing concrete has been taken, and this was not even indicated today by President Dhanusha in his speech.
The SVAT is a great example. It's a fiasco. The Indian revenue has to still pay something like 26 billion or something for the since 2011. Yeah. But they went on a trial program. Nobody knows who the companies were because they kept it to themselves. And we believe that SVAT should not be removed. SVAT should continue because that it will be a huge impact on the exporter on his cash flow. they will be uncompetitive and they will have to close shop. SVAT has to remain for the foreseeable future.
Right. Thank you very much, Sean Van Dort, Chairman of the Shippers Council. I now move my attention towards Maxime Wickramasinghe, Director Marketing, Thema Collection. Maxime, while Sean says the AI is polluted, but in terms of tourism, things are looking very positive at the moment. If you try to book a hotel right now, anywhere in Sri Lanka, it's full. So a lot of optimism has driven through following the presidential election. What are the positive things that you have seen over the last 12 months as far as tourism is concerned in the country?
Well, thanks, Shamir. I think, look, at the moment we are just having the natural resurgence that happens after a crisis. We are very much, I believe, on par. Will just miss on around 2 million tourists for 2024. And, I think revenues are good and we're finally recovering since 2019, which is something very positive for an industry that actually can create so much wealth. I think, this year there hasn't been that many things that have really been put in place to really help us. It's a very natural recovery. There's a lot of talk of a global campaign for tourism, which is extremely vital. It's something that we are lobbying for as an industry every day, and it's something that unfortunately will definitely take a bit longer now to get implemented with the new government coming in. But there were a few positives. We had a really bad visa fiasco that I believe we all spoke about here as well. And this is something that, that finally, as the government came in, they took the steps, put the visa back. So there has been a lot of positives from there. But I think, it's definitely a long-term game as well, because, we have just come back to the natural or neutral level. And, there's a lot of talk about high-end tourism. How do we get them in? I think, Sri Lankan tourism is really for everyone, for all sectors. And that's the beauty of tourism in Sri Lanka, because you can really uplift a lot of people in rural backgrounds and rural areas. And it's not something that is really tied to educational qualifications and things like that. I think you just need the will and you can make it in the tourism industry. So there has to be a lot of work that goes into really marketing the destination. We always, I think, joke about the taglines changing, so I believe taglines will change again. And I think, forget the tagline, just get something out there and attract people to Sri Lanka with our messaging, which will drive up the revenues per head. That is something we really have to look at. We often, numbers are thrown every month about predictions for 2030, 2025. And I think it can't be on a PAX count. It really has to be driven on a revenue count. And because we are a country with limited resources, and keeping that special, authentic nature of the country is what's going to sell Sri Lanka.
So you're trying to say, in other words, Maxime, like what happened with the tea promotion that was supposed to be carried out in Sri Lanka, millions of rupees were spent on just paying a PR company to do the research, than really putting into practice what was supposed to be implemented. That has not even happened with regard to even tourism. Am I right?
Look, I think that's a systemic issue that's been there with every single government, every single person that has been in line. So what I always say is, it's not really the fault of this government. Let's give it a bit of time. Let's see how they get it on the ground. We have, as an industry, said the critical need of getting this out definitely in the next 6 months, because we have to really promote in the right way to our key source markets to get that right clientele. So,
Maxime, now the government has a vision. They've already highlighted that they want to increase tourist arrivals to 4 million tourists a year in 2 years from now. Are we ready? Because you can say things. We've seen this happening even at political fora. We just spoke to Dhananath about the pay tax, for an example. All this is just in the air. But let's put into practice a mechanism where we can achieve that 4 million. Do we have that mechanism in place? If not, what should we do in terms of taking corrective action to put us in the right course?
Yeah, I really don't think we have that mechanism in place in terms of product development, in terms of, I would say, getting in investment to build the right kind of hotels in the right kind of areas, and also empowering rural communities, to set up their own businesses as well, and guest houses, hotels, because that is also a big segment within Sri Lanka. I think that marketing as well as that product development really has to happen. Like I said, I think 4 million in 2 years definitely really can't happen at the moment.
But there are so many hotels that's coming up. We just saw a 5-star hotel being opened in Kolpiti just a couple of days ago. We have the cinnamon chain that has opened up and is now fully operational. ITC is here. Then we have the Shangri-Las, we have the Amaris. We have a lot of hotels that are being mushrooming right now in the city.
Absolutely. I think, I maybe talk a bit from a biased lens because our hotels are all spread around, none in Colombo very purposefully, and, we believe that. But I think that's again where marketing comes into play. You have Colombo, which is a city destination, which has lower occupancies, I would say, at the moment than any other place like Sigiriya, Kandy, especially down south. And what is the reason for it? We haven't positioned Colombo. It doesn't have the product to really cater to that. So once we really create all these different infrastructures and push that message out there, I think, we have to even look at marketing, for example, you said Colombo, as a separate destination with the entertainment and as a regional destination. I think that's something we're not always doing. We're just thinking about Sri Lanka, but, we have the two seasons. And
Colombo is a MICE destination.
Yeah, Colombo is a MICE destination, entertainment hub for the region. So, there are things that are coming along with the casinos coming up. So that's something that really has to have a little bit of push in to get it done. For example, we talk about MICE, but, if you want to organize a mega convention, mega conference, even with, the new hotels coming in, you really struggle actually to do something really massive.
So I just want to move now my attention. Thank you very much, Maxime. I want to move my attention towards Dhanusha, Gihan, Pathirana. I'm already getting a lot of questions today on the pay tax and Sujeewa's remarks alongside with Maxime and Sean. Let's get all this into perspective as the show goes along. I now want to focus my attention on Dhanusha, Gihan, Pathirana, economist. Dhanusha, now, we saw Ranil Wickramasinghe issuing a statement recently. He says, I commend President Anukumar Dissanayake for going ahead with the Economic and Technical Cooperation Agreement and the development of Trincomalee as a regional energy and industrial hub. Now, this statement was issued in light of President Anukumar Dissanayaka's visit to India. So this goes on to show that the JVP, which was against EDCA at one point, has now given the nod to go ahead with this agreement in question. How do you view this after coming into power, the change from a left party to somewhat a center left party right now? How do you view all these developments, Dhanusha?
Well, first of all, I think JVPs now completely have turned towards the right. You can't even now call it a center-left party
anymore.
But at the same time, I would also say there are certain positives out of this particular political change. Now, for instance, now they have completely sort of attacked the earlier ways and norms of the political establishment when it comes to their let's say their security spending and all sorts of other extraordinary spending that they tend to allocate to themselves. But when it comes to economic policy, so to speak, I think they have, as anyone would say, have completely turned to the right, which was, I think, mostly unexpected by the voters, especially more informed voters. And I would also like to say that I mean the current the voter base that is already backing the NPP regime right now, I think is sort of a way spreading a misconception about the IMF program, and that the current government having not so much of room in order to transform let's say the distribution of resources. That maybe we can touch on that in 3 points. One, I would say, from the perspective of government revenue. Now, one major suggestion by the IMF has been to do away with the tax concessions that has been extended through especially the BOI. It was also an invention by an IMF program in the mid-90s. But now they have come to the conclusion that these tax concessions in 2022 have eaten into as much as 4% of or 4% of the GDP in terms of tax revenue. So IMF has proposed to actually, phase out these tax concessions. So no word has been said by the current establishment about this. And in March this year, 31st, government itself came out with a report showing somewhere around 978 billion as the tax expenditure of all these concessions given, and more than 400 billion of that has gone on to BOI firms. So that is one point. And imagine now, of course, there is always, we try to blame the wage bill of the government, saying that it is there is almost twice the amount of people that there should be in the government service. So that has been a huge burden. Now, if we take the total wage bill, it's about 1 trillion, and if we compare the total tax expenditure due to tax concessions, is almost equal to that. Now, that is a point where no one brings out in comparison. Now,
so you are trying to say, in other words, just to make it very simple, the tax that we are paying right now, we are spending the entire amount of money on the government wage bill.
No, that's not what I'm trying to say. So now, if we compare the tax expenditure, that is to say the tax concessions that we have lost in terms of tax revenue, so that is almost equal to the entire wage bill. So if we assume the fact that there is twice as more people in the state sector, that means we can bring down the wage bill by half.
So you're trying to say, in other words, I'm just trying to figure out, Dhanusha, so we can move on to the second one. I just want to understand. So you're saying bring down the government expenditure on the wage. So that means cut down the people in the government sector and bring it down, so we'll be able to get that benefit. So that's the hard stand the government has to take.
No, Shabir, no, I misunderstood me. I'm trying to compare and contrast here,
right?
Because this is a particular figure that has not been discussed widely. The tax expenditure or the tax concessions. This is handed over to our corporate elite, and so that is costing us more than the wage bill. That is my point. So
Dhanusha, I also want to ask you, we'll come back to your thoughts as we move on momentarily. Now, just want to understand, now 2028 is the first initial time in which the government will have to pay ISB holders. However, Dr. Harshad Silva speaking in Parliament says something completely different. He says that the interest has to be paid up until 2028. Then he goes on to say, if the GDP is growing in Sri Lanka by the year 2028, the haircut that will be taken by the ISP holders will be reduced. Now, all these things are very new for the public. Very quickly, within a minute, if you can explain that to us.
Yes, I think from right throughout we've been saying this, that you have to pay interest, and not only that you have to pay interest, this agreement has been backdated to 2024. Now that we'll be starting these interest payments from 2025, we'll have to account for 2024 payments also in the year 2025. Now this is a disaster, because if you take the interest rates that you have to manage from let's say from 25 to 27, you have an annual interest rate of around 3.5%. But imagine when the agreement is backdated, the interest rate actually doubles. The actual amount you have to pay this year becomes 7%. It's
so
not
how much is that? How much is that?
So if you take
terms?
So it comes to around $1.4 billion, including the consent fee of 220 million. So if you exclude that, the total debt repayments comes to 1.2 billion for the 2 years. That is for 2024 plus 2025.
So in other words, what you're trying to say is, Dhanusha, if we don't manage the country's economy well, we might even default once again before 2028.
Way before 2028, because now we have to also consider there is a RBI swap that is maturing next year. So we had borrowed 2.6 billion from India as a swap facility, that is for central bank to boost the reserves position. We paid 600 million this year so far. Now central bank has agreed, according to the central bank accounts, that the bond or the swap will be maturing by 2026.
Right.
So within 2 years we have to pay 2 billion more. That means at least 1 billion you have to be accounting for next year. So on top of this 1.8 billion, we have 1 billion staring at our face through the RBI swap facility. Right. And while we were discussing, you also saying, look, there's a particular brand of these vehicles. Now already orders have been put for over 240 million US dollars. That's for only a particular model. Right.
So again, I want to open the floor for questions from journalists on the immediate right is Shihar, on the immediate left is Nadim. We have a question from one of our viewers. I'm going to take that first, and then get the two journalists to pose questions. Dhananath, now, there are two types of payments that the government pays to international debt, maybe ISPs or maybe World Bank or ADB and all that. So now we were of the opinion here in Sri Lanka that until 2028 we don't have to pay ISB holders. That was the idea. We only had to honor the payments in terms of the ADB, the World Bank and the IMF. What's this payment that Dhanusha is talking about that we have to pay between 2024 to 2028 without the IMF, without the ADB, without the World Bank? What's this payment that we're talking about?
There is interest, Shamir. So basically this...
but we were told that we don't have to pay ISB holders interest or anything of that sort before. So the mechanics have now changed, is it?
Yes, basically we didn't pay from 2022 April 12th up to now. We didn't pay interest nor the bond. So basically, Shamir, this bond is, imagine I am the government of Sri Lanka. I am giving a piece of paper to Shamir, and there are three key things marked. One is how much Shamir is going to give me, marked as, let's say, $1 billion. And then under that there is a interest. I'm just simplifying it for people's understanding. And then interest rate 3.3%. And then the time period, let's say 2028. So when I give that piece of paper, that means every year for that 1 billion, I have to pay Shamir 3%. Generally, this has to be paid every 6 months or depending on the bond. So that means every 6 months, I have to pay approximately 1.5% of that entire value every 6 months if it's paying biannually to Shamir. And I pay it for, let's say, at the bottom it says 2028. So I pay until then every 6 months that interest. And at the end, I have to pay that 1.5% or 3% interest plus that 1 billion. So our bonds will start that 1 billion, which called sometimes a bullet payment. That bullet payments will start from 2028. But till then, we have to pay that interest. So approximately we have to pay about...
But was it there in the earlier debt restructuring then?
Generally, I think it's agreed upon, because if you are issuing a bond, let's say 2028 or 2027, in the bond it is given, unless it's specifically said that, look, your interest starts maturing.
No, what I'm asking is like earlier what we were told is like the whole debt repayments will start for ISB will be start repaying from 2028 or 2027, I guess, right? 5 years from the debt, the sovereign default, right? Now, so all of a sudden we see we have to pay interest rates. Was it there in the debt restructuring negotiation earlier?
That first thing is that document that we see is after they release. So they have given the structure. I think it's implied that on the bonds, because generally if you are issuing a bond, it's given that you have to pay the interest. I think this conversation came for the bilateral debt, because on bilateral, what is the moratorium period was, I think, in discussion. I don't think even up to date we know it's the it's a comparable treatment will be given, but from which date that we are paying. So I think if it's a bond, unless it's specifically mentioned, every 6 months you have to pay the interest.
So I want to make it very specific than for our viewers to understand. Let's put these numbers a little bit more simpler. Now let's say ISP holders give the government 1,000 million as a loan.
Correct.
Right. Now, based on what Dr. Harshali Silva is saying, if our GDP goes up to a certain percentage from 88 billion to 98 billion, or hovering in that range, the haircut is only going to be 17%. Am I right?
That's correct, yeah.
Right. If the haircut is going to be 17%, let's say we pay interest up to 3% every in the next 3 years. 4 years, example from 2024 to 2028. So you are ending up paying 120 million by the end of 2028 on interest payment alone.
That's correct.
So if you look at the 17% haircut, it's only 170 million, the haircut on the capital expenditure that they would take by 2028. So actually, if you deduct this 120 million by 170 million that we're talking about, the difference is going to be only 50 million, which is approximately a haircut of only 5% the ISB holders are going to take at the end of the day. So ultimately, Dhananath, it's very clear this deal that has been arrived at by the Ranil Wickramasinghe administration is not in favor of the government or not in favor of the interest of the people in Sri Lanka.
If I understood right, Shamir, on the bonds that they have issued after the restructuring, the haircut is not on that. That has already discounted the haircut, because we had about
that has already been
exactly.
Okay.
We had about 12.5 billion worth of ISB holdings. So it has been recalculated. The new bonds are issued after that haircut. But that haircut,
these are the macro-linked bonds that
these are the macro-linked bonds, and there are 2 governance-linked bonds. So after that, when you are issuing the new bond based on your GDP growth, your interest rate can change. If you are performing well beyond the IMF threshold, you have to pay a higher interest, and your haircut will also come down.
Yeah, but that is not in the of course, Dhananath, an 88 billion economy will grow by 2028 invariably to around 93 to 97 billion.
No, absolutely, Shamir.
So we are going to be at the receiving end, and we are going to pay money, and actually the EPF and ETF has lost more money than the ISP
No,
holders.
absolutely, Shamir. In a debt restructuring and a debt negotiation, always things could have been better. I mean, if we don't have to pay a single cent, that's the best case scenario. But since it's a negotiation, I agree on the local debt. Now, if the GDP grows, the bondholders are getting a benefit, but the same benefit will not get by the local creditors.
Let me put it to you this way: have we been trapped in a cycle? Because even before, we've seen groups like Debt Justice, etc., have said that this is putting Sri Lanka in a very sort of knife's edge position, and they predicted that we would be in a position where we are at risk of defaulting again come 2028. There are others who are saying we might actually default again before that. When you look at how this has been negotiated, the deal that has been made, can you call it a deal at all?
I won't go to that extent, because I would get the blame first on our end, because it was
we should have negotiated much better.
One thing is we could have negotiated much better, but even before that we borrowed money very responsibly. That was the genesis of the crisis. So I would first take the blame as a responsible country on our end first, because we borrowed too much money in dollar terms, in short maturity, at very high interest rates. But at the negotiation, of course, we could have done better.
So if you're saying, Dhananath, that we could have done better, why didn't the Andhra Kumar Disanayak administration negotiate it again?
That would be a tricky point, Shamir, because already if we delay it, again the consequences could have been bad. That's why I say that you have to compare between the next alternative.
So this is a raw deal.
this is in a way, I mean, I won't call it a road deal, but of course things could have been better. But the next option, you have to compare between the two alternatives. No, if you delay it or if you drag it for few more years, things could have been worse. So it's a negotiation, and in a negotiation, of course, even if you get like, let's say 50% haircut, next day someone can come and say, look, 60% or 70% could have been nicer. Of course, it's nicer, but it's always it's debatable. So that's why I'm saying, one second, Nadeem, the only way out is growing the economy. You have to grow out from that crisis. There is no other way out. Even if you get like 70%, like let's say countries like Argentina got much bigger haircuts than us, they still went and defaulted. So the only way out is reforms and growing out. I wish this deal could have been better, of course. I mean, things.
So when you say we should grow out of this, are you trying to say that our GDP has to be more than 88 billion?
Absolutely.
It has to be.
It has to be. The growth rate has to be about 5-6% for about 10 years.
So when you say reforms, Dhananath, right? Does it mean that the election promises are going to be always a fake one?
Absolutely. I mean, what you see from all parties in what they have promised is not the. I mean, there are two things that I would say not to do. One thing is, don't print money beyond your capacity, and you have to keep the primary balance up. Those two things you have to continue, and then you have to do that growth enhancing other reforms. That's on connectivity, the land reforms, the electricity reforms. Those reforms has to happen. Otherwise, how are we going to reduce the electricity tariff without?
No, but the government has already said that they won't restructure the CEB.
It would be very difficult. Without that, it would be very difficult. How can you bring down the electricity costs?
But they can tax us, no?
I mean, then again we are going to the same vicious
Even
cycle.
they have stopped the privatization of Sri Lankan Airlines.
No, exactly. There are three ways that they can do. One is on connectivity and connecting to the Indian market and grow the economy. That's option number one. Option number two is on privatization and getting more private sector involved, which is, again, these are all political decisions. I mean, it's difficult. The third one is on the investment side. Even for investors to come, you have to have which I have spoken extensively, you have to have the land available, you have to do the land reforms, and again the custom reforms.
Right. So Sujeewa, we have a question from one of our viewers for you. Sujeewa is wrong.
Can I just add half a minute?
Yes.
See, the IMF baseline is 88.6 billion. Today, for the first time, I don't know, Dhananath, even whether you were listening, Minister Hadunette gave the projected GDP numbers for 2025 and 2026. So the numbers are going to be at an exchange rate of, if you take at 300, our GDP is going to be 109 billion in 2025. Our baseline is 88, right? At 88, you get that 29% haircut. So he is predicting that our GDP would be at exchange rate of 300, right? It's 109 billion, and in 2026, it's 117 billion. So this is the first time that this GDP, the forecasted GDP numbers have been announced. It was announced in Parliament today. So we need to keep that in mind. So taking that into account, I agree with Dhananath. President AKD had very little room to negotiate because these are done, sealed and almost delivered, and he was pushed against the wall. And if you didn't do that, the repercussions and the consequences would have been far more disastrous. Yes, we'll go to the question.
Right. Sujeewa, so one of our viewers thinks that you're wrong, so I'm going to pose the entire question to you.
Sure.
Sujeewa is wrong regarding the stock market as an investment for pensioners, as when you age, you become less equity tolerant. Stock market investments have a risk equivalent that is much higher than fixed interest schemes that pensioners are comfortable with. The government should exempt interest income from the withholding tax scheme and broad-base the tax net.
So I agree. So that is why, Nadeem, for the first time, you must give credit to the Inland Revenue Department. They have got all the information relating to savings accounts and what we call time deposits. So that has demand deposits and the fixed deposits, right? all that has been brought in, the withholding tax that has been deducted is now with the Inland Revenue Department. So if you're a pensioner, you're a university lecturer, you're a doctor, you're a professional, you're a farmer, and you have deposits either in savings accounts or time deposits, your withholding tax that has been deducted is now with the Inland Revenue Department, and it's there in your tax return. Whether you like it or not, it will appear on your tax return. So this is the first time that the tax return has a pre-populated information. Otherwise you get your blank return, right? 10-page blank return. But now on the system, for the first time, you have a withholding tax that has been there. My view is that within a year, they would also include what vehicles you are owning, what properties you are owning, which apartments are you owning. All that information is, not, in my view, that are not there on stage 1. So stage 1, credit to Inland Revenue, they have got the withholding tax information is there. So be careful if you have not paid your taxes, start paying your taxes on your interest income, otherwise you will get assessment from the Inland Revenue. So to your question on pensioners, yes. See, the pensioners may not, see, it's all about risk. How much risk are you willing to take? You don't want any risks to be taken. You go and put it on go to the National Savings Bank or any of the 10 private banks. You go and put it onto a savings account or fixed deposit account. But what will you get? Now you will get 4%, 5%, right? Because the policy rates are at 8%, somewhere around there. You will get about 5%. You want a higher return, then you have to take a higher risk. So of course there is a risk associated with the stock exchange. But the returns have been exorbitant, and still our market multiples in Sri Lanka is very attractive, extremely attractive. See, most of the banks are going at 50% to the book or 60% to the asset value. If the bank has assets of 100, the share is going at 60 rupees. It's really attractive. So that gentleman's question on exempting on withholding tax. See, this is a big ticket item. As I said, last year they collected 150 billion. How does the 150 billion come? In my view, it's low. In the Sri Lankan banking system, we have deposits of about 13 trillion of our total assets. 13 trillion. If 1% is taxed, that's 130 billion. 13 trillion of deposits is your money and my money is there in the banking system. 13 trillion. 1% on 13 trillion is 130 billion. So you can't. This is a big ticket item, very difficult to exempt. I know the problem that the pension, because they are fixed income. They are fixed income. But I heard President AKD saying that the pensioners are going to get a 3,000 rupee allowance from, I think either this month or next month.
3,000 rupees?
3,000 rupees to the pensioners. We have 450,000 pensioners.
3,000 rupees, it's like Bandru Guru saying you can give
No.
2,500 rupees.
No, so we need to get this right. When you have 450,000 pensioners, right, 1,000 rupee increase per month costs 450 billion, right? And you have to give it for 12 months, and that's 1,000 rupees. So it's a huge cost.
So Sujeewa, I need to understand something.
So it can't be exempted, if you ask me.
Right. Because we all know, because now the tax system is digitized. So when you
and
go
it's
to
capturing
everyone. So let's say an individual goes to and puts your TIN number, you get all the FDs.
So Nadim, you need to pay your tax. You need to make sure that all your deposits all over the banking system is now brought into your tax return.
So just to understand now, we're talking about the pay tax that we're talking about.
Yes.
Now, the government has increased the threshold from 100,000 to 150,000.
Yes.
And in the meantime, the government has lifted the import restrictions on motor vehicles.
Yes.
So this is invariably telling the people, now you have 50,000 rupees extra. Why not go to a vehicle import company and start purchasing your vehicles? Now you have 50,000 rupees extra. However, now 2 weeks ago when we had Dhananath on this very show, Dhananath said that if the government is looking at this progressively, Dhananath, you can add if you want to, the import tax on vehicles has to come down.
Yeah, so I'll tell you so this is important. I think Sean also raised this. See, if you take the total, I don't know whether you saw that news item, recently the customs chief came out and said at the end of the 9 months, I believe, I think it was September numbers, he has collected 1.2 trillion. Record number at customs. So even though there is leakage, as Sean says, still revenue collection has been extraordinary, right? 1.2 trillion for 9 months is basically you are collecting about 150 billion every month. So they are going to, the IMF target is 1.5 trillion and they are going to hit that 1.5 trillion. Out of that, in a normal year, Shamir, vehicle taxes contribute to about 25 to 30%, right? So if they are hitting 1.5 trillion of customs income, right, for the year, without taxes on motor vehicles, because there was only a very small number that had been brought in, and they have said 30 Mercedes, 40 vehicles of these, very small numbers, right? They're all less than 100.
Are you saying the import tax on vehicles have to come down?
No. If it was there, they would have collected, right, about another 30%. So they would have technically gone up even up to about 2 trillion of, so their income, customs income would have been about 2 trillion because in 2024 there were no import of motor vehicles. They are ending up at about 1.5, which is a fantastic number, right? So your question, next year, as soon as the vehicles are allowed, in my view, they are going to get at least another 200 billion of additional income.
No, is it progressive? That's the question.
No, so the problem in Sri Lanka, I think Dhananath also had a good post on this, you pay 3 times more on a vehicle in Sri Lanka. So all that is taxes to the government.
But Dhananath is looking at buying a vehicle.
Yeah, I mean, he's looking at his S-Class, buying that one, right? Right? But that's where it is. So we need to understand, Shamir, again, in the IMF program, this year, we would end up anything between 13 and 14%
so
of our revenues, right? So when you have to hit 15% of GDP, if your GDP is going to be 100 billion, additional 1%, right? $100 billion. How much is 1%? $1 billion you need to, because we will end up at 14%. We have to go to 15%. 1% we have to collect. 1% is 300 billion rupees. So where is this 300 billion rupees that is coming in? Because we have to hit that number. So that number, in my view, will be mainly coming from 2 items. One is this 5% to 10% on withholding tax. Other one is the allowing of vehicle imports.
So Sean, if you look at the numbers that Sujeewa is saying, now we've had this conversation with Sujeewa, Dhananath, Dhanusha on many occasions in terms of this taxation. What Dhananath and Sujeewa before today were of the opinion that the government should also bite the bullet rather than making direct taxes on people directly, so where their revenue collection would be easier. They have to be a little bit creative also. But now this system that Anukumar Dissanayake has brought in to the table in terms of collecting revenue is also very direct taxes. It's nothing new. This is the same thing that Ranil Wickramasinghe was doing during his time. So it's very clear that Anukumar Dissanayake is walking on the path of Ranil Wickramasinghe's economic forecast and economic governance system, isn't it?
Absolutely. There was no other way that they could have done it anyway. Because Ranil Wickramasinghe's government created the platform to take us out of all this crap that we had fallen into. So what was the other option? And I think there's a reluctance in the mindset of Sri Lankans. They hate to pay taxes. We must pay taxes, but we must also see benefits for us. So AKD has no option. President had no option but to follow the platform that was created for him to walk on that platform. What was he going to offer?
So you're saying, in other words, that now the baby that was supposed to be taken from one end of the bridge to the other end of the bridge is now been handed over to Anukumar Dissanayake.
Absolutely.
And he's taking that baby on the same bridge.
Thank God it was not from the cradle to the grave. It's from one cradle to another cradle.
Gihan, I want to ask this question now. They are Anukumar Dissanayake today, he said that they are going to relax the imports on vehicle, right? Now, when we banned the vehicle, we had an issue of Forex, right? The reserves have been now boosted to from effectively $20 million to I think around $5 billion, right? So how do you see this move, right? Is it healthy to open the imports now? I mean, Sujeewa told like it's a basically a revenue measure, right? Which is true, right? I think even IMF has projected somewhere around $100 to $200 billion, depending on the imports, right? Now for that we also need to be prepared our reserves, and we should be able to absorb that shock. Like we can't lose $1 billion reserve, in very quick succession.
So just before you answers, today again, President AKD said in Parliament, I don't know whether you all listened, he said there would be reserves of $15 billion by 2028.
So that's the target IMF has given.
No, that's not a target, that is President AKD's target.
No, that's the target IMF has given them to go to the international market.
So President AKD is very confident of hitting that 50. So we need to keep that in mind. Yeah. We are now about 6 billion right now.
6.5, yeah.
So he is very confident that this 15 billion target can be met while allowing vehicles. Sorry to interrupt.
So no problem. Yeah.
I think like.
So what kind of disruptions? Disruption.
I think there will be a huge disruption. Ante, I should mention before Sujeewa was saying we should take. You shouldn't take what politicians say at face value. If he's targeting 15 billion by 2028, we need to actually weigh in the possibilities of that actually happening. So if I just
give us
go
a breakdown, Dhanusha, in your opinion, this 15 billion, how are they going to?
I don't see it's going 50. I see going down south, Samir, because now we have a reserve position of 6.5 billion, including the Chinese yuan swap, which is not in dollars, which is in Chinese yuan, and you cannot use it.
The restrictions on usage.
Tremendous restrictions. You can't use it if your reserves fall below an import cover of 3 months, and our import cover is almost 3 months. Excluding the Chinese yuan, we have 5 billion of reserves. Now in month of November, even before all these costs we are now trying to sort of understand, 100 billion of our reserves have fallen in November, while the central bank was actually buying in, trying to boost the reserves. While they were trying, they have lost 100 million. Now what I'm trying to say here is next year we are looking at a minimum of $4.3 billion of additional payments. We have 1.2 billion in terms of servicing the ISB interest payments, and don't forget the capital that you have to pay for the PDI bond. That is a past due interest bond transformed into a plain vanilla bond. We have to pay that in installments before 2027.
This is the 2024, 2025 amount, right? The
yes, 4-5 amount, we have to pay all that together. So all that comes to around 1.2 billion, and there's a 220 million consent fee, again 1.4 billion. And I consulted the central bank on what this Dhananath was saying about the bilateral interest. They confirm you have to pay interest on that also, because otherwise it's a violation of comparability of treatment. So that interest comes to 2%, right? Something around 2%. We are 10.5 billion. They are around 420 million there also for both years. There you get 1.8 billion. And I was talking about the Reserve Bank of India swap, which we have to pay before 2026.
So Gihan, now Dhananath is saying the only way we're going to get out of this, look, we've got a raw deal. Yeah. We have been on the wrong end of the stick. Much of it is our own fault, because we've been the ones who have been borrowing like lunatics. What do you see as our way out of this?
Different perspectives on all those points. So one thing, if I have to go back to whether we were definitely responsible. Obviously, we've been saying this right throughout.
If you're defaulting, you've definitely been irresponsible.
But then there is a responsibility on the part of the lender also, Samir, because now there are international conventions, or what we call frameworks, laid down by the World Bank in as early as mid-90s and updated by both IMF and the World Bank in mid-2000s. Let's say if you go to their websites, they have updated it. Started way back in 2005 April. they have given guidelines. Look, if a country of a low income nature or developing country goes beyond a particular threshold of debt to GDP ratio, they are in trouble.
I understand
Right?
where you're coming from, Gihan, but also, I mean, there are frameworks. Right? There have been this thing, but loan sharks are called sharks for a reason.
For a
right?
reason, yes. So
You smell
we have to
blood
argue
in the
on these.
water. No, we can
on these
argue. We
points.
can argue on it. But what I'm saying is, you
I
also
mean, at the
you also
discussion
have to
table.
confront reality. No, the reality is these people will behave in the way that they have behaved for so long, and we're also entering. We appear to be entering an era of global politics where international frameworks, whether it's climate agreements or human rights law, are basically being ignored, right? So in this era, when confronting this reality, how do you see us growing, getting out of this rut and ensuring the safety and security of the Sri Lankan people, other than for what Dhananath is talking about?
Yeah,
to
let me
basically grow yourself
qualify
out of it?
few things what you're saying. Because now we need to really bring all these points into the negotiation table in order to cut a better deal.
But the
That's what-
negotiation's already done.
already done. That's what we did not do, and that's how certain countries, like for instance Ecuador, they had a debt audit committee, if I get the term right, under the President Rafael Correa back in 2008 or 9, and so based on that only they came up with the conclusion. Look, I'm going in another direction. So what I'm trying to say is that these countries who got a far greater haircut had a better negotiation strategy, who were actually, like Sabir said, they were representing the people, not the loan sharks. Now our people have gone
but
and...
Gihan, even with Ecuador, because you mentioned Rafael Correa, I mean, Correa was there, he had the audit committee, did all of that, then he was voted out. IMF comes into Ecuador hands over Julian Assange in the UK, and then it's all
look,
hunky-dory,
that's a
right?
different story.
No, I'm saying
taking
these are the realities that you need to confront when you're dealing with this
No,
world
I don't
of
think that's
global
a reality.
geopolitics. These are realities that you have to deal
because
with.
that I'm looking at a particular incident and a particular example, Samir.
No, but
you
that example
can't take it out of that context and
I'm adding to the context because even in Sri Lanka's case, when we're having these negotiations, when you put it in that context, there are multiple factors influencing the outcomes of these negotiations.
I have to respectfully disagree because I'm here talking about how a debt renegotiation process happened. So after that, these countries can go into in a tangent that we cannot. I'm not.
But what I'm asking is, what do you see as the future for us now in China? Because the negotiation part of it is already done, with the ISP holders, with the IMF, etc. And you're saying that we're at risk of redefaulting as early as late 2026.
As early as probably next year, late 2025.
Okay, late 2025. Given that is the situation and there's very little wriggle room as far as we're concerned, what path do you see for Sri Lanka to get out of this? Before late 2025, what can we do immediately?
Yes, now that they have signed on to this mess. So what I was trying to say, we have 4.3 billion staring at our face next year with a usable reserve of 5 billion. Now I'm saying this without speaking about the oil prices. Now we know the global powers are at each other, warmongering, right? So oil prices could shoot up at any moment. We cannot write that out, that possibility. And even the central bank had long ago said, if the oil price shoots above $80 per barrel, we are in deep trouble. And now it's hovering around 70. Imagine this goes up 15-20%. The additional costs will be even more greater and our reserves will be wiped out. Why I am saying this? In November, our reserves have partially gone down a little bit, even before all these costs kicking in.
But there was no increase in the imports, right?
No, it has increased because it was roughly around 1.4 billion throughout.
You're saying a raw deal, Gihan, but I'm trying to understand.
Right now,
Lazard was involved. So what was their role?
Now, it's a good question because now Lazard was also involved in Ghana. Ghana got a fairly good deal because Ghana rejected the initial deal proposed by the creditors. Like what we got, we completely accepted it with both hands. In fact, those who rejected it was IMF and bilateral creditors, not Sri Lankan government.
Right. So I just want to understand, Maxime, now, the Chinese tourist arrivals to Sri Lanka is being looked at very optimistically as far as Sri Lanka is concerned now. Sujeewa said that the government has an intention, Anil Kumar Dissanayake has an intention of having 15 billion in reserves. So tourist arrivals will play a big role. What are the projections for the next 4 years?
Look, I think it's quite hard, I mean, to make a big projection on it. I think definitely 4 million would be a bit tough. I think 3.5 is something that's actually achievable.
What has been the best year for, this was in 2018, if
2018, 2.3 million, I believe. They projected, I think this year, at the start of the year, 2.4 million, but that didn't happen. We never really know what the reasons are, but for me, the visa issues as well as, the little terror alert that came could have been some of the reasons. But
what's the projection for this year, by the end of 2024?
It was 2.4 million, but we will just maybe inch to 2 million. Even that is not 100% sure. Next year we'll definitely, I think, hit over 2.5, 2.6, maybe even higher.
Actually, if I can just on that number, when you say definitely 2.5, 2.6, maybe even higher, because we, in this game of sort of policy making, you do need to have a certain amount of foresight as well. Right? Now, as Sujeewa quite rightly pointed out, the government has laid down, this is our projection as far as GDP growth, as far as what our reserve positions are going to be, etc. When Gotabaya Rajapaksa became president in 2019, in the fourth quarter of 2019, he also had similar plans, similar projections. And he said, I'm going on this tax cutting spree, it's going to spur economic growth, and that is what it is. At the same time, they were completely oblivious to things happening, not just within the country, but also around the world with the pandemic. And they were warned of these things that could happen. So when you're talking about definitely, I mean, just before you, Gihan was talking about, we're in a very volatile situation as far as the world is concerned. Oil prices could shoot up at any given time. There are a bunch of conflicts which could escalate to unprecedented levels at any given time. In this context, do you feel that we are putting too many of our eggs in the same basket vis-a-vis tourism?
Look, absolutely, because tourism will always be probably the lowest hanging fruit, but also the most volatile. Yeah, volatile and susceptible fruit to any type of disaster. That we know that, and that's why I think us in tourism are not the best in projections. We, especially over the last 4 years, we've learned to take it day by day. But look, we are very hopeful of it, but we will always have that issue. For example, when we were here discussing that travel alert, although it was very minute, those little things do have slight repercussions that
it could have been worse.
And just a small information can definitely go out a long way. So we are always going to be that volatile industry because of that. That being said, we really need that stability, but there are a lot of things that we also can do. I think we are talking a lot about government earnings. There are also things the government can't ignore that are happening in Sri Lanka. For me, Sri Lanka is probably tourism is probably the least regulated industry in Sri Lanka.
So Sean, just to understand now, why isn't the customs officials against reforming the customs industry in the country? Because now Sujeewa mentioned some interesting facts. He said that by September, because I remember when the last 1 month of Ranil Wickramasinghe, there were a lot of new rhetoric that came into play. They said that 1.2 trillion has been safeguarded through the customs. He has done so much and more. So if you're looking at the entire year, we're looking at approximately 1.5 billion in custom revenue as far as 5 trillion as far as 2024 is concerned. If that is the case, why isn't the customs officials not backing the proposal of fully digitization as far as the industry is concerned? What's the reason?
Is that grey area that individuals try on making private money? That's a fact. The customs revenue collection, I want to correct with due respect, it's not earnings, it's revenue collection. They don't earn anything.
Correct, it's revenue collection.
Yeah, revenue collection. We have been strong in advocating this, that if the digitalization comes in, government revenue collection will double without any problems. Without digitalization, a good percentage goes into private individual hands. Right? It's called bribery and forced bribery. The ordinances are the customs ordinance is so powerful that they can do anything and everything they want. And the governments that we have had, and this government also, is fearful of tackling them directly and taking a hard call and saying, no, we are going to digitalize you 100%. There is no more paper documents. Because if the customs goes on strike, and this is evidence in the past, government won't collect their daily revenue. They need money to run daily.
Bishwan, do you think that you're being unfair by the government by saying that, look, because it's only been a month since the parliament was elected, only 3 months since the administration, that as far, because digital transformation itself is a medium to long-term project, right? And the government has pledged, at least, along with the projections, that we are going to be digitizing large parts of the state infrastructure. Do you feel that you're being unfair in being do you feel that you're being overly critical as far as digitization of the customs service?
We are not.
Do you feel that your criticism is too early?
No.
That you should wait maybe?
No, I don't think so.
Yeah.
I always been the COVID period.
Yeah.
The happiest times of a logistician's life in this country was COVID. Apologies for the loss of life, etc. We didn't have to hand out any money. Goods came in, documents were done from their homes, they passed documents, and the revenue collection was there, right? So if it was possible in COVID time, for the fear of their lives, those individuals, a few corrupt individuals, and they spoiled the whole apple cart. After COVID was taken away, they reverted back to their manual. So digitalization was there. People forget that. Not just customs. Every other border protection agency.
I want to add something to that, Nadeem. Coming from the tea industry, I remember when I joined the tea industry, since 2016, we were trying to champion this e-auction platform.
Yeah.
And until 2022, until COVID came, within 2 weeks, an e-auction system was up and running in the Colombo tea auction in Sri Lanka.
And actually, my hats off to the people who put it in place. Today,
it's running.
It's running.
It is not a secret.
Yeah.
Why do you...
So what you're saying is essentially is that it's just a sheer lack of will.
Sheer lack of political will and the Sri Lankan mindset. Eat, drink, dance and die.
Right. So we have a lot of questions coming in. So I'm trying to... I'll go with Dhananath first. Dhananath, the question is, Sujeewa spoke about 15 billion in reserves by 2028, and that is Anukumar Dissanayaka's target. The question is, how is the government going to safeguard 15 billion and save $15 billion in reserves by 2028, when right now the reserves are over just 5 billion, and as Dhanusha said, we have to pay 1.4 billion. So if that's the case, it's only 3.5 billion we have in reserves. How can we up this game by 1.5 billion extra and save money when we start paying our debt?
Just to pause you, I'll just read that paragraph. And I mean, I believe AKD will deliver on this, right? He's saying we are confident, We are confident in our goal of increasing Sri Lanka's foreign exchange reserves to USD 15.1 billion by 2028. This is not just an aspiration. It is a commitment that we are diligently working to fulfill.
Right. So.
Yeah. So I do not want to endorse any numbers, but I will explain how this can be achieved as a solution. Now, to understand that, we have to first, there are two myths, Shamir. First is, we believe that we are importing from reserves, which is completely untrue. I can explain it in theory, but I will try to explain it in practical way. Now, our import bill is about 20 billion per year. Approximately. Our reserves is 6 billion. So if we are importing from reserves, there's no way that we can import 20 billion out of 6 billion reserves. How are we going to import then? We are importing from export revenue, from remittances, from tourism, from services. That comes like those are the input tabs. Let's say it's the table. Exporters, everyone brings their dollars to the table. Importers are taking it. Based on the demand and supply, the exchange rate will be determined. That's number one. Number two, there's another misperception saying that because of imports, your currency is getting depreciated. If that is true, I take you back to the same COVID period. President Gotabaya Rajapaksa banned all imports. Turmeric, even some of the essential medicine. Everything was banned. What happened to the currency? 180 to 360. How come? So we are not, the currency is not depreciated by imports. But there's a connection. The connection is the interest rates. Whoever who is going to import is going to go with rupees. And rupees is derived on the interest rate. Interest rate is the price for the money. If I am going to buy tea, likewise if I am going to go to the shop and ask for money, the price that they are going to ask for money is the interest rate.
No, but Dhananath, at that time we saw some major mistakes happening with the country's economy as well as management. We saw the manner in which how the rupee interest rates were lower compared to US dollar interest rates.
Absolutely.
You know. Then we saw the manner in which how the government started printing money as there was no end to it. We still have economic pundits saying that printing money doesn't cause inflation as well. We've had some of them on this very show as well before. But there were some big problems that came into play with regard to country's economy before. So there were some issues. So we just can't say Gotabaya Rajapaksa administration just completely put a ban on imports. As a result of that, the US dollar went up to 360 against the rupee.
Shamir, you are absolutely spot on. You should be offered a doctorate on economics. Exactly the point. Now, by printing money, honorary doctorate. Yeah. Now printing, exactly, you are spot on. Now I'm happy that you picked that up, because what did they do? What did they do? They, by printing money, actually what did they do? They brought the interest rates artificially down. That was the mistake. And by artificially bringing the interest rates down, by printing money, they said there's no relationship for inflation. And when you bring down the cost of money down, of course, everyone is going to go and import. Let's assume a hypothetical scenario. Let's say we are allowing imports, vehicle imports. Let's say, this is hypothetical. The government says, if you are buying a vehicle, of course people have to get a lease or a finance facility. If the government says, for financing facilities and leases, let's say, the interest rate from banks and leasing companies is 80%. Do you think the vehicle imports would be as high as now? Definitely not. Even if you open everything. Why? Because people cannot access money that easily to import vehicles. So
just to add on to so it's a good point. I don't know whether you can remember that some time ago, you have, when you're opening LC, it has to be 100% cash back.
Absolutely.
As soon as that happened, Shamir, you will know this as an exporter, the imports came down. Because the imports are too expensive.
Exactly.
So that's a good example of that.
Absolutely. So it's mainly the interest rate. So if my worry is, I'm not saying the currency won't depreciate. If the government, if the central bank keeps the interest rates artificially low through their open market operations, with the central bank independence, their first window of printing money is out. But there are few more windows that they can do it. If they do it, my friend, we are in trouble. Currency will depreciate, and when the currency depreciates, then that problem comes, because to defend that currency, you are diluting the reserves. That's why people...
So Dhananath, you said if they do it, what's to stop them from doing it? It seems that you're afraid that they will do it.
Yeah.
You believe that it's a foregone conclusion that they will do it.
In the current legislature, we cannot stop it. So then you have to tweak, further tighten the central bank act.
No, but the thing is, by current legislation, there can't be political interference compelling them to engage in that kind of activity. But what's to stop officials at the central bank from deciding themselves unilaterally that we need to do this and going ahead and doing it?
I do not have an answer, Nadeem, unfortunately for that. I'm sorry, I will think about it.
I'll just add something on that. See, I am confident that we can't go back to where we were because of two reasons. Because there is legislation in place now on the monetary policy side, the Central Bank Act has been revised, and the scope of work they can do and their tasks and responsibilities are extremely well defined, right? So the way they used to do it in the past, whenever Finance Ministry wants, ST will give a call to the governor and say, mate, can you give me 100 billion? Boom, given, right? That can't be done anymore. Why? Through legislation. The second one, that is further legislation on the Finance Ministry. We have what is called this Public Finance Management Act, PFMA. Earlier it was called FMRA, Financial Management Responsibility Act. So under that, again, restrictions have been brought in. So on the fiscal side as well as on the monetary side, the good thing is the status quo has changed. There is legislation in place. Earlier there was no legislation.
But Sujeewa, if I can ask, if I can just, I mean, in the corporate world, having been on boards of companies, so you know that, okay, many boards, etc. Right? So you know that your accountability, what keeps you accountable is you have people that you are accountable to, your shareholders, your various stakeholders, etc. But my question to Dhananath is really, the legislation is now there to stop political interference in the central bank's activities.
Correct.
But I mean, what is it that's keeping the central bank officials themselves accountable?
No, see, the governor
because
has,
what's to stop them
the
from
governor has
engaging
very clearly, I mean, I like this position taken by the governor. Governor has clearly said, see, what's the role of the central bank? One thing is price stability, right? Second one is financial system stability. That means the banks and the finance companies are not going to crash. Other than price stability. His responsibility is not economic growth. That is not within central bank's purview. That is up to the government to do. Central bank's key role is this, and governor has repeated this on many occasions. Price stability, that means inflation. What is your targeted inflation? What is the bandwidth you want to operate on? Other one is financial system stability, right? Economic growth is up to the government and finance ministry. So that's the difference on this. So that is why it says, look, the central bank's role is clearly defined. The act has given them a lot of independence and power, and I don't believe that we will go back to, because we've learned it through the sort of really hard way, very unlikely for it to happen again.
Sure. Let's not forget the fact that in 2012, when Mahinda Rajapaksa, as the Minister of Finance, was making his budgeted speech, he in fact said that the rupee would be floated against the US dollar at this level, and that was viewed by economic pundits as a very bad move, because Mahinda Rajapaksa trying to interfere with the monetary policy of the country when the fiscal policies were being discussed in Parliament. This was in the year 2012.
But Shami, this used to happen even until recently, because the government requires about 60-70 billion to pay salaries. Come 25th, when they don't have money, you just give, as I said, you give a call and say, mate, I need 50 billion and please make sure Bank of Ceylon and People's Bank has that cash. Simple as that. That is how this country was run, whether we like it or not, and that doesn't happen anymore. So, and today they are not on overdraft. They are on I don't know the number, but I was told that it could be even as high as about 500 billion surplus is Finance Ministry.
Right. So Dhanusha, Sujeewa is very optimistic about the Honorable Sanak administration. Dhananath says it can be done, 15 billion in reserves. And you're the only one in this table who's very pessimistic, you and Sean. Why is that?
Maybe because of the customs.
You on the government.
I'm on the side of the people, on the side of those who with power. So,
but can't this be the 15 billion?
Quickly comment on the imports business that Dhananath was trying to explain. Now, according to what he's trying to say is that these additional foreign exchange expenditure, we can pay it through our export income. Now, this is a misconception. Because right now, our foreign exchange expenditure does not limit to the import expenditure of around 20 billion. We have about 1 billion repatriations of profits of the MNCs, and then there's a equal amount or less of the professionals working for these guys. And then we have debt repayments, already about 1.3 billion in addition to what I was talking about. And then you have yes, well, I forget the rest. So now you have expenditure more than your imports bill in terms of foreign exchange. Now our foreign exchange income through exports, remittances and services exports are not sufficient to meet all this. Right now we are just breaking balance. So that's why I am saying this will have to be expenses that have to be met through the reserves. Because like I said, in November, our reserves fell by $100 billion before even these expenditure kicked in. So right now we are just breaking even because the debt repayments are not having its full force, and the additional these what you call vehicle imports. Right. So now just one point on vehicles, very quickly, 30 seconds. Now even without money printing, Samir, there will be a shift in the composition of our consumption. We will be moving our rupee income towards a dollar expenditure in this particular scenario of opening up vehicle imports after 7 years. So there is a massive pent-up demand on one hand, and what the merchants could project is that, look here, this can have an impact on the exchange rate. So they will try to speculate in the sense, beat the market, so that they will put their orders beforehand. This in economics we call, when you're trying to beat the market, the trend gets even more aggravated. So,
right. So Sujeewa, I have a question.
So just one thing. Over the last 12 months, central bank has bought $2 billion. October to October, net amount bought. I mean, I have the numbers.
But the role of the central bank is not to bring in money, no?
No. They have bought dollars.
They bought dollars.
Net
They
foreign
have bought
assets
dollars.
is zero.
Right? No, I agree. Right. So they have bought. Right, last October 108, November 117, 118, January 245, February 239, March 715, April 419, May 192, June there's a sale of 50, July 121, August 148, September 96, October 190.
Yes, in November also they bought.
Yeah, 2 billion.
Fell.
So that is how this has gone up to 6.
We have questions.
No, the reserves have shot up to
but
that
level. But it includes the swap as well.
Debt,
so I agree on that.
Debt, you have 2 billion, and you have again 1.4 with the Chinese swap, right? And then you have another 1 billion with IMF, already borrowed money, and with this particular program. So all that is debt, and if you look at the net foreign assets position, it's zero.
Right. So, Sujeewa, so the inflation target, which is in the new CBA Act, is a check on irresponsible open market operations, which will fuel inflation.
No, not only that. So it's one aspect of which can create inflation.
Yeah, can I quickly
open market operations.
quickly comment
That's
on
what happened about 2 months ago. They're wondering, is it money printing, not money printing? There's huge amount of debate.
Yeah.
So that's just one aspect of it. So the central bank governor has clearly said right now he wants to actually prop up the inflation a little bit, because at the moment it's kind of a deflation, right? We are virtually at 0%, maybe 0.5% this way, that way. He wants to get a little bit of inflation going, which is important.
Right. So I'm getting a lot of questions. I'm sorry, Shah, I'm just going to give an opportunity as well, but the viewers are watching the show, and we need to give them an opportunity to pose questions as well. So that is what this show is all about. Now, Sujeewa, you spoke earlier about withholding tax. So the question is again for you, because you were very passionate about saying the government can achieve its revenue targets. The government says in order to give relief to the low and middle income earners, they have raised the tax free from 100,000 to 150,000. Having said that, they have increased the withholding tax from 5% to 10%, including the same category of income earners. Isn't this contradictory against each other?
No, see, Shamil, we need to understand, if the government, we have a revenue target which we need to hit. So if you are going to forego any kind of revenue, if you are going to give 100 billion of concessions, they have to collect 100 billion from somewhere. Simple as that. And in my view, The two big ticket items which is going to come in for next year's budget is this vehicle, is the taxes on vehicles and this withholding tax. But at the same time, they have said now they have removed the yogurt and on fresh milk, the VAT. One of the big things which we didn't discuss, a good thing that President AKD has done is he has removed the so-called special commodity levy. You know what results in special commodity levy? Sini wanchawa, inguru wanchawa, kaha wanchawa, sudulunu wanchawa, all because of special commodity levy. Why? Like now at 11 midnight.
Basically all the midnight gazettes.
All the midnight gazettes and the trade minister. That is why, see, there are only 5 ministries. No, all these you have 50 ministers. They want only 5 ministries. Out of 1 is trade.
Right.
Why? Because the midnight gazettes. So you can just change it, and they want to replace it with VAT. So that's an excellent move by President AKD.
Yeah. So Sean, I have a question for you as well. You're speaking so eloquently and also with so much of passion with regard to reforming the customs. Hasn't Minister Bimal spoken about all these issues with stakeholders?
It doesn't come under him. The customs doesn't come under me. He's Minister of Ports, Shipping and Highways.
Finance Ministry.
It comes under the Finance Ministry. And our past experience has been a dungeonic experience in Ministry of Finance. They won't touch the nucleus of this whole issue.
So, but Anurakumar Dissanayake, I'm just going to rephrase it now. Anurakumar Dissanayake is the Minister of Finance in Sri Lanka at the moment. Hasn't he spoken to the stakeholders relating to the problems at Sri Lanka customs? Because I'll tell you, Sean, this is a major problem. We as exporters, when we go to customs to clear something, the customs ask us in turn to give them a bribe. And if we don't give them a bribe, they make our life difficult by putting those containers into government analyst departments, so on and so forth. So invariably, you are paying demurrage as that bribery cost that you're talking about. So we as a company, we don't endorse that at all. We completely put a stop and we take the highway if it's required to do so. So the question is, why isn't the minister, as the president, who's the Minister of Finance, take appropriate action on this?
The president tried. He had one meeting with all the stakeholders. And at that time, we were plucking the low-hanging fruit. Because the customs also, to be fair with them, they don't have the necessary infrastructure to give a service.
Correct.
Right? Over the past, due to corruption, individuals got inspection yards for customs, like resulting from the VAT fraud in Inland Revenue. Those guys who benefited today have so-called all these private terminals that the government can bring the revenue into the country. And the insufficient infrastructure creates a bottleneck. That's number one. Number two, the lack of digitalization has created another bottleneck. The biggest bottleneck is the customs ordinance that 3 committees tried to change. We were part of those committees. The reports were written and sent to the president. It's gathering dust somewhere. So no one has the, I don't want to use the wrong word now here, the spine to take the customs on. They are
Sean, now I've seen your press conferences.
Yeah.
Because being in the media in the last few months, you've been very vocal, and you've called a spade a spade. So, isn't this falling into some sort of years? Is it like trying to pour water into a duck's back?
I think it's trying to pour water on an ass's back. Nobody takes notice of this. The ramifications, the impact for the general public due to these fraudulent deals and activities and delays is huge. Finally, you and I pay for everything, right? So, digital, without hitting the person, I still remember former DG told me, let's hit the process. But the moment we try to hit the process, the union is so strong. I mean, they get the minister.
But now, Sean, we are trying to get what you're saying with a pinch of salt now. Now, the secretary to the president is a former customs individual.
Yeah.
So he can champion this. Of course, he can do it. He knows the loopholes. He
and
knows
he has written
the issues.
extensively on corruption.
Absolutely. But
So why can't he do it?
I tried to contact him. He doesn't even pick up the calls, right? And
Now you
that-
can't expect the second.
No,
president
come
to
on. I
answer
mean,
a call.
we have been face to face. We have had so many discussions.
Before.
Yeah, before. So, end of the day, it's the political will of any government to make a change. For example, I will tell you the CCTV option. Customs objected to CCTV at inspection yards.
Correct.
Customs objected to electronic in and out thumbprints. Why? It's a beautiful place to be. Graduates from universities who strike for every single thing in this country, once they get into customs, they become the most corrupt people in this country. Corrupt than the politicians. Because corruption is happening every second, every minute, every hour in imports and exports.
So, quick question from Maxi.
So that's why digital ministry is under President AKD
as well.
Maxi, when
So
we left off earlier, you said that like talking about tourism, you said it's one of the least regulated sectors in the country. Are you asking for more regulation in the tourism sector?
Look, I would like to say I think we need regulation by deregulation. So I think one of the issues is the exact getting in, creating a hotel, coming in, investing, especially for foreigners, is an extremely complex issue. So I think we really have to make that easy. For example, if you look
You're
at...
talking about a streamlining of regulation.
You have to streamline things. You have to streamline things, and then you have to make sure that all the players come to that equal playing field. I'm sure we've all heard these stories about Allah having only 2 alcohol licenses. You find a beer everywhere. So if you look at government regulation and tax collection, maybe they're not liable for that 18% VAT, but still, there's a lot of capture of government revenue capture also that can come in from this.
So just like Sean has big problems with customs, yours are with the third branch of revenue collection, which is the excise department.
Excuse me, that's not the issue. There have not been enough political candidates from Al area to get the That's the issue.
No, but the problem is, if we want to be a tourism economy, we have to get rid of all these rules and regulations around just having a simple thing as an alcohol license for a...
And at the end of the day, Maxime, this discussion about serving alcohol during on-poya days should be lifted, don't you think, in your opinion? Because if you're looking at 4 million tourists who are going to come to Sri Lanka, if they can't find a beer or wine or alcohol on a poya day, it's sad, because there have been certain instances, certain years where you have a poya day on the 3rd of February, 4th is Independence Day, and then 2 days no alcohol for a tourist.
Absolutely. I believe one Christmas also fell on a poya one year. And no, look, I think you have to really look at it from that lens. Other countries, other Buddhist countries don't have such regulations. If you look at Thailand, the biggest party is on full moon days. It's a very famous thing. You go to Thailand for a full moon party. So we also have to be a bit realistic with that. But I'll tell you something else, that you can actually find a drink on a poya day if you go to places which don't have regulations in place, which is why a lot of these people, not the only reason, but high licensing fees, high costs. So there are so many issues. And when you look at also now Sri Lanka, we say it's becoming the new Bali. It's not just because tourists are coming, it's also because a lot of foreigners are coming in and investing in Sri Lanka. We need to make sure that all that money, not just from foreign, even we know a few, there are local companies as well, hiding revenues out of the country, not paying their taxes, not paying their VAT, hiding and becoming under the threshold, not registered. So these are a lot of things that have to be done. And how do you do it? Not by adding more regulation, by deregulating, and then you have more people that will have to come in.
This is an issue that was raised before the election, in run-up to the election as well. I remember we had from the Inbound Tour Operators Association, Mr. Nishani, he said in their list of priorities for the industry in which they submitted to the government, the issue of these illegally run businesses, of cash being stashed overseas or escaping the domestic financial system altogether, was number 3 on their list of, or number 2 or 3 on the list of priorities. Do you feel that the government is not really, because we haven't really seen any statements from those in the government on this issue, as far as tourism regulation or common sense regulation in tourism is concerned. Do you feel that the government is ignoring your concerns?
I wouldn't say so, because next week we do have at Slido, which I'm a part of as well, we do have a meeting. There's a stakeholder meeting on this particular issue that will happen. We've had meetings, we've spoken about issues, but what's good is sometimes even the stakeholders weren't really consulted when certain decisions or ideas were put forth. So at least that is happening now. So we can actually hopefully see a bit of an opening and a bit more regulation coming in, because we are at that crossroads right now. We cannot also let just unregulated development go on in our tourist areas, because we will lose what people come to Sri Lanka for. And those hard decisions have to be taken. It's not just about the foreign business. There are plenty of local businesses also that are avoiding tax, not regulated. So overall, we have to really look at this issue.
You had a question.
Yes. Sean, given that the reserve target of 15.1 billion now AKD has told the parliament, what's the role of exporters? Because this export has been repeatedly said to be kind of they are trying to boost it, but it's not growing beyond now 1 billion per month, right? What's really happening, and what kind of boost you all need to grow?
The export basket has remained the same right throughout. We have not been able to add any other dimension or any other commodity to the export market.
Why?
Because the people are comfortable with the herd mentality. The people who have been doing tea will always do tea. What is the value addition of tea that goes out of this country? Dubai ships more value addition tea than Sri Lanka. Not a tea bush grows in that country. And all those SLS marks, etc., that's a different story altogether. We brought we sat with the international ITC and we wrote the national export strategy. Right? They have a boat building to essence to a lot of other commodities that we brought in. Unfortunately for us, every time we bring in a new piece of work that we have done, a beautiful piece of work, the national export strategy, government changed. When we took that and went to the new government, that's the old government, we don't want to do the same thing. Now again, then it was Ranil Wickramasinghe's brainchild. He came in and we tried to revitalize it, re-engineer it. EDB chairman came and said, no, this is not good enough. We have identified loopholes in this system and we want to increase more to do another export strategy, which we challenged. So it is a case of discontinuation of a brainchild or an idea that keeps on taking us into the dungeons again.
You mean the policy inconsistency?
Policy inconsistency is absolutely number one.
Sean, you spoke about the tea industry and you said that Dubai doesn't even grow a bush of tea. Don't you think that Dubai is doing well because they have liberalized imports of tea from other nations as well, from India, Kenya, Sri Lanka, and they blend their teas in Dubai. As a result of that, they're able to export more value-added teas than in Sri Lanka.
Absolutely.
And unfortunately, in Sri Lanka, liberalizing the tea industry is a taboo word. You don't talk about it.
Liberalization in every industry is a taboo word. The tea industry suffered, I believe, when two huge giants were prohibited of blending, right? And they brought up this SLS mark saying that it will violate our SLS mark. That could have been monitored better. Blending should have been in this country.
Example, Ahmad Tea is now in Dubai. They broke away completely and went as
they left very Dubai. Sadly, they left this country, and what beautiful companies those are. Today they ship more than just the bulk tea goes in. We get the basic dollar, but the value addition creates the money. Who tells me? You tell me, you travel. How many people ask for Ceylon tea in a hotel? I am a proud Sri Lankan. I asked for a pot of tea. I do not know whether it came from Kenya, whether it came from China, or it came from Sri Lanka.
Or Darjeeling.
Huh?
Or Darjeeling.
Or Darjeeling. So, I believe the greed of individuals contributed to this whole issue. Others are tea exports could have been more. So, to answer your question, our export basket has to be diversified. Because we cannot live on tape-all rubber.
Yeah, because tea industry, if you look at it, it's only contributed 1.5 billion. And if you're looking at making this a 2.5 billion to $3 billion industry, it has to be liberalized, Sean.
But the after effects of the no fertilizer right? Low investment into the tea plantations by companies who only look at taking profit, right? Private sector only looks at profit, so that it is a vicious cycle. When the boomerang comes back to you, it hits you harder.
Right. So Dhananath, I have a question for you from one of our viewers as well. Dhananath, President Anurukumar Dissanayake has 94 departments under him. He is one of the presidents who has been holding such an amount of departments under him. Example, Bimal Ratnayake, who is the Minister of Civil Aviation, is not even in charge of Sri Lankan Airlines. How do you view this?
I had the same comment when President Wickramasinghe was the finance minister. This is too much for a president. And this is concentrating power too much, because it's impossible. You have 94 departments. Even if you spend one day, probably you can go 3 days. Even if you work like probably 300 days a year, you can visit that department 3 times a year, which is not feasible. And the other challenge is finance minister's job is a Sujeewa's job, accountant's job, which is not popular at all. You are cutting down expenditure, you are trying to increase revenue. I mean, both sides are very unpopular. And when you have a president who is looking for a second mandate, and when you are a president who is looking for people's mandate, then it is very difficult to run both those functions. And it's too much power on one side. I want to add 2 quick suggestions for Sean and Maxi. On Sean's, I think digitization, I go 100% with Sean. Another way to look at it is you bring down the tariff deviation down. Now the problem is, now for each HS code, there's a separate tariff calculation. When you have so much of deviation on tariff, that's one area that the customs can tweak, because this HS code, there's one tariff, and they can say, look, I can move it to another HS code and I can get you a different tariff. Or if they are, now Sean criticized, next day one of the Sean's things he imports, they can put it into a different tariff code and charge a higher tariff. So if we can minimize the deviation on tariff, that's one thing that we could do. On tourism, I think one of the key tourism problems is, while there are tourists we have to attract, on the cost of construction. Because tourism requires refurbishment on their their properties.
And hotels are falling apart.
Absolutely. If you go to main Colombo hotels, they are old hotels. You have to refurbish. For refurbishing, your construction cost is very high. Your tiles are about 103% protected. Your steel is protected. Your cement is protected. Your bathware is protected. So that is adding to the room rate. Because ultimately when they renovate the hotel, they have to cover that investment through the room rate. So your room rate becoming very uncompetitive in the global market to compete with Bali, Thailand or wherever, because of this high price. So those are the 2 things we can boost on tourism,
so Dhananath,
as well as on...
So Dhananath, you make a very important point, Maxime. This construction, now if you look at countries like Thailand, you can stay at a 5-star hotel at a cost of around $100 to $110 US.
Yeah.
But in Sri Lanka, if you're going to stay at a 5-star hotel, you're ending up paying around $185 to $200. Now, I was traveling to Malta, and a 5-star hotel in Malta is going at just below $100. And if you look at that in comparison with Sri Lanka, the prices are very, very, very high.
Look, I think also the taxation portion, which is around 30% if you take in the service charge, is one of the main things that pushes these prices up. There's also a bit of demand and supply and a bit of greed, but construction cost is definitely actually a barrier. I would like, our most recent hotel we're opening, Ambayalu, idea was initially do it as a 3-star hotel, because that's where we thought, where we needed a hotel within our portfolio in that region. But looking at the construction cost, you have to actually...
What's the ROI that you're looking at, just to understand? Is it 5 years or 10 years when it comes to...
For a project like that, I would say it would definitely take around 5 years. But, we are very smart when in terms of investment. It's not really about the quality of the hotel that you create.
Just to understand, Sean, let's put some numbers so we can just understand. To construct a hotel of the one that you are talking about, what would be the approximate cost in US dollars?
So it's a bit tricky because it was a half-built hotel, and
Right.
you know when you
No, but approximately. I know not exactly an exact figure, but just a ballpark figure. How much will it cost in US dollar terms?
in US dollars again, there's a lot of variables that come into play, right?
Approximately, how much are you looking
Again,
at?
too many variables that
okay.
come in where you're doing it. But I'll tell
because usually, I think Sujeewa can add to this, usually when you're a corporate, you don't look at more than 5 years in terms of an ROI
Yeah.
when you're putting in money for a machine or something of that sort. If it's a property, it goes up around 10 years, right, Sujeewa? So that's what I'm asking. Why are you looking at a 5-year return on investment on a project when this could be really around 10 years, and then as a result of that, the prices can really come down, and that would fuel and accelerate tourism arrivals to the country?
Yeah, I think so. But I think also, like, one thing that we've learned is that you have to be a bit strategic with what you do, right? So that hotel, much bigger investment, but we did, if you go to a place like Galloe, which we went there and did a campsite or glamping site, as we call it. That ROI was not even just around 1 year. So it really depends on what you're creating, the experiences you're creating, and also, you know, it's not about the hotel room, the amenities. I got my marbles from Italy. It's about the story you tell and how you market that and how you push that out, the hospitality, and also, you know, different things that you get into the product. So it's like I said, again, it's a very hard thing to quantify. I think, you know, for us, we look at all these different elements when we do put an investment
But
in.
isn't there the greed that steps in and seeps in, you know, where you know, the private sector is really trying to make money, and what Sean said, you know, the greed,
No, I mean,
absolute greed, you know.
Absolutely, there is a lot of it, but you know, I think, you know, as you say, like, you know, tourism, sometimes your margins and what your earnings are not as high as people imagine sometimes. But at the end of the day, when you do a hotel, and if you do it right, if you know how to market it, how to push it out, you can make
But
money.
Maxime, now, before you came to the show, and when I was told that you are coming,
Yeah.
I tried to get a booking at one of your hotels, and your hotels are fully booked up until end of March.
Yeah.
And April comes the local tourist arrival, so nothing to be greedy about.
Yeah. I mean, yeah, honestly, you don't really have to be. But again, it's how we market it, right? For example, you take a hotel on the south, now their prices have gone sky high. You see a hotel selling at $350, come May selling at $80 or $90, 5-star hotel, right? So again, you can't help the monsoon, you can't help the beach, you can't help all of that, but there are little things you can do to market and push it differently.
Right.
So again, you know, it comes again for me to marketing, pitching yourself, and how you...
So I want to give each speaker an opportunity to sum up. We spoke about the postmortems and what went wrong in terms of the economy. We spoke about today's speech that was made by Kumar Dissanayake, which was a big positive and a few negatives as far as the election promises were concerned. I want to give an opportunity to each speaker 3 minutes as to what would be the way forward for Sri Lanka in the next 1 year. We are just end of 2024. There is so much on the plate of the Honorable Kumar Dissanayake administration right now in terms of fulfilling the promises, pledges, rather than looking at education qualifications and credentials. As Sean mentioned before, what is required right now is to focus completely on the country's economy. Let's start off with Dhanusha, Gihan, Pathirana, economist, in terms of what your thoughts are for the government.
Yeah, I think one point that has been gone completely under the radar is the government's domestic interest costs. So that has to be addressed immediately, Samir, because that can be done. It can be done in a very short period of time, because government needs the fiscal space to, you know, get on with whatever the other programs that they have in mind. So if I just give you an example, Sri Lanka has the highest ratio as interest costs as a ratio of tax revenue in the world, which is 78% by 2024-2023. Second in line comes again Ghana. Ghana is somewhere around 42 or 43%. So likewise, what we are seeing is close to 80% of our revenue sucked up by the domestic, basically the interest costs. So it needs to do a more comprehensive domestic debt restructuring that does justice for the EPF holders, because EPF has been abused right throughout, which everybody has been commenting on it, and there's so much of evidence on it. So let the EPF go, pick out the people who are actually benefiting from these interest expenses and bring it down. Because in 2021 we had a 1 trillion worth of interest expenses, now it's close to 3 trillion, has shot up three times. So this is where the difficulty faced by the government. So it has to immediately try to resolve this issue by, I'm not saying to play around with the maturities, but you can certainly play around with the coupon rates, the interest rates, without hurting anyone. Because the high interest rate deposits which the banks issued, which they would again complain, have already now matured. Because it's like a rule of thumb, Sri Lankans only put very short term in FDs. So banks' interest cost profile has already gone down compared to government's interest cost profile. So it need to revise those, then it has more fiscal space. And number two, like I earlier said, it has to address even what the IMF had raised, the issue of tax concessions. So we can be at 15% very easily if they address these issues, and government has a fiscal, because it needs to build the fiscal space, the capital it needs, so that it won't be putting too much pressure on the banking system. It has been already borrowing in billions. So,
Dhanusha, very quickly, there are 22 million people in Sri Lanka. How many tax files should be there in the country?
Well, no, the issue with that, Samir, we have to look at the structure of our economy. Now, certain estimates say our informal sector is as high as 70%. So what we mean by the informal sector is that it is very difficult to get the rule of law engaged in that particular sector's income. So, and if you look at the private sector, a very less percentage of workers are working, if you take the entire workforce into account. Now,
how many tax files? Because right now we have how many, Sujeewa, how many tax files do you have right now?
Yeah. So some may not have tax files, Shamil, because they are because they only see, you don't need a tax file if your source of income is only employment, and then because that's where the bulk of the people are.
Right.
And it would get deducted straight away from the employer. Yeah, right. Okay. So I agree on that.
Right. So I'll come back to you. Yeah. I'll give you an opportunity. I just want to just pick your brain on this in terms of the taxation. I want to give an opportunity to Maxime Wickramasinghe to sum up what your thoughts are with regard to tourism. And next 1 year, how optimistic are you? Can we do 4 million in the next 2 years? The time starts now.
I'll basically say how I think we really can achieve that, right? So I think one thing we are really lacking is our human capital and our human resources. We have a lot of investment that has to go in because a big portion of the tourists that come to our country don't speak English, and you need guides. You need people to, accommodate to them. So that is something that we really have to focus on, to really get it up and also get the standards up, whether it's going into a hotel doing service and also promoting people to actually come into the industry. Like we are opening a hotel where we're only employing females because we want to do a bit of promotion, and that's also gender gaps also that have to be looked into. The other thing is definitely marketing. We can't go another 6 months without a global marketing campaign. I don't even know, I wasn't even working in the industry when the last one was. And it's something that's severely lacking. What this will do is, and what it should aim to do is, pushing people to different regions, showing different parts of Sri Lanka, and getting a whole different cross sections of tourists to Sri Lanka, and also pushing the off seasons, pushing the East Coast, pushing all these areas which really have a lot of potential. If you look at this, and the other one, it's definitely the product that we have. It's good, but what exactly have we done to improve our product? When I mean product, it could be things like, for example, even the airport capacity to all the activities, the experiences, and what attracts someone to come to Sri Lanka. You look at other countries, a lot of things are being created in the last 5-10 years to attract tourists. We have not done as much. We have done almost nothing. It doesn't have to be the government, it can be the private sector also. And that is something that's really important. And in the in the long run, we have to also make sure, if we're looking at, we spoke a lot about government revenues, how we can get as many people in the tourism industry under regulated, and also regulation that works, that doesn't have to succumb to bribery, that doesn't have to succumb to jumping through hoops to get small things done, and being stopped by red tape at every level. This is something that a lot of us, especially if you're going to construct a hotel, if you're going to invest, that is something that really needs to really be, that has to really be streamlined, and you need that one-stop shop approach when it comes to doing something, because you have all the different departments. Environment comes in, excise, Pradesha Sabha, urban development authority. Sometimes no one really knows exactly how to even tackle it. Sometimes you have different authorities that come in at different periods, which is honestly a bit of a mess. So I think if we base our plans and our ideas on these 4 aspects, we can definitely, tourism will definitely, I think, one day become the largest Forex earner, in my opinion, and that's something that can easily be achieved.
Thank you very much,
So
Maxime.
quick one,
Yeah.
the number of TIN numbers are 4.5 million.
Right.
Number of tax files are 1.1 as of
1.1.
July.
Right. Thanks, Sujeewa. Sean, wrap up.
For me,
Being the pessimist you are, let's look at a little bit of optimism.
no, I'm always been optimist. Unfortunately, circumstances make me pessimist, because we have been eating the same cake for the last so many years. The most important thing for the business is simplified HS codes and tax structure. Simplified, so that no one can, or 99% of the time, they will adhere to it. So many parameters create avenue for them to cheat. Single window. No investor will come into this country if they have to be going around from Grama Sevaka reports to so many other regulatory bodies that are sitting miles apart. Right? No one is going to invest here. The single window has been launched thrice by different government institutes. Customs launched it twice. Some other institute, but there is no light at the end of the tunnel. So single window, if you don't get that proper, we are looking at down the barrel of the gun. Digitalization must be prioritized for customs and border protection agencies. Airports to BOI to even the excise department. One of the biggest crooked departments in this country. Nobody talks about it. You spoke about licensing. The guys come at 6 o'clock in the evening, drink the best alcohol, eat the best food, and take a package home also. Nobody talks about it because they are scared. Unfortunately, that industry doesn't talk about it. So we are looking at a single window, very strong anti-bribery laws and regulations. No point having a guy penalized for 2,000 rupees and then after 3 months he's back again on the field again. You have to bring in strong laws, otherwise this country will not progress. We have been talking about this for the last 74 years. What has happened? Single window, simplified HS codes, customs ordinance has to be revised to suit the 21st century requirements of industries. This ordinance was written by honorable people for honorable people. That ordinance is so powerful. So that has to be seriously looked at. Again, I'm telling you, 3 times we sat in committees to rewrite the customs ordinance. It sits on somebody's table, nobody knows. Right? So if we can get that streamlined, I think we have a super chance of even exceeding AKD's projection of 15 billion. It can even be 20 billion. Revenue collection to the government will be streamlined.
Thank you very much, Sean, for looking at the silver lining at the end of a dark tunnel. Dhananath, what's your way forward for the country and the government?
The last few minutes, I would like to raise a point for the poorest of the poor, Shamir. I never expected in my wildest dreams I would ever quote Karl Marx coming from a market-based think tank. Now, at the moment, we are imposing 50% tariff on our rice imports, another 10 rupees on big onions. because by having taxes on imports for the food on the poorest of the poor is a big problem. When on foreign corn, when the taxes were imposed, this is what Karl Marx said. To impose protective duties on foreign corn is infamous. It is to speculate on the famine of peoples. And he did it in the Trade Congress in Brussels in 1848. So that same tariff which causes the poverty and hunger of the poor, and the same will have an impact on the tourism when you have high import tariffs on construction. Same with many other goods and services. I commend, President Dissanayake today brought down the VAT on yogurts and things like that, but the same problem is there for so many other food items. For apples, for grapes, for oranges, there's massive taxes. And you just go and look where those products are being sold. Those are sold at Peta bus stand, Mathar bus stand, and that cannot be someone who's coming from S-Class to buy apples from Mathar bus stand.
Well, Dissanayake was seen recently buying apples in
maybe after losing the portfolio. But however, it is the product of the poorest of the poor, and we have to make it affordable by bringing the tariffs. Even the conversation on after bringing the pay tax down, it's the middle class who is going to buy build a house, and if you walk around you can see most of the houses, the first floor is done, the ground floor is done, and you can see the concrete spikes because your cost of construction is about 40% higher. So for government, if they want to keep the popularity and also for the betterment of the people, one area which is also within the Karl Marx gospel words, that bring down the tariff rates and simplify it. It will solve some issues that Sean spoke, and if we were to come out from this crisis, the reform is the only formula. As it was said, winners are focusing on winning and the losers are targeting the winners. If we want to win, we have to get to the formula of winning, and that's only through economic reforms. We have to reform the state-owned enterprises, we have to get the social safety net, increase paying on Astasuma, digitization and increase the tax net, give the land rights, bring down the tariff for the poorest of the poor, so then they can have better access on food.
Right. Thank you very much, Dhananath. I now give my attention to Sujeewa Mudalige, past president of CA Sri Lanka.
Shami, so main thing which I want to see in the short term is I want to see President AKD's growth story, which we haven't seen still. And one of the reasons why President Wickramasinghe lost the election is that his growth story was, by 2048, I will make this a prosperous nation. He very well knew that he would be 6 feet underground, and I was not impressed because I will also be 6 feet underground by that time. And Shami, you are a CEO of a company. You tell your employees, in 30 years, you are going to get 12 months bonus. You think your employees would be impressed? They would be energized? They would sort of back you on everything? No. Right? So in my view, that's one of the biggest mistakes that President Wickramasinghe did. I am confident that President AKD, which is budget speech coming up in either end of February or March, I want to see that growth story being spelled out. I am confident because he is one leader who can carry the people with him. Because if you don't carry the people, Shamir, as a leader, as a captain, right, you're going to fail. And that's what happened to President Wickramasinghe. He's a smart guy, but he couldn't carry the people. So that is what the biggest challenge for President AKD over the next 2-3 months, and I'm confident he'll do that. He is one person, he's one politician who can carry the people, right? So that growth story needs to come. So that is where, how are you going to hit that 15 billion reserves target? How are you going to make sure that your debt to GDP starts, coming down? And all those other KPIs, the framework, we will hit those targets, is by that growth. So where will that growth story come from? We need to know, okay, what is your what is your strategy on India? How are we going to piggyback on India's success story? What's our plan with China? What's going to be our energy policy? How are we going to attract $2 billion we have never had $2 billion FDIs. That's what Sean was talking about. I think everyone else was talking about, right? We have never had. So that story needs to be spelled out. So that is my only desire over the next 2 to 3 months, that we would see a growth story, and President AKD will deliver on that, and he will be able to carry the people with him together with that growth story.
Right. Thank you very much, Sujeewa Mudalige, past president of CA Sri Lanka. Seeing you after some time, Sujeewa. Now, how enjoying your retirement? Or?
Very much, very much.
Thank you very much, Sean Van Dort, chairman of the Shippers Council. Sean has been very vocal with the customs reforms over the years. Thank you very much, Maxime as well. Maxime Wickramasinghe, director marketing, Thema Collection. Maxime has been coming on the show many a time to discuss about the issues plaguing the tourism industry in the country. Thank you very much, Dhanusha, Gihan, Pathirana, who always sees some pessimism and some constructive engagement that the government should engage in terms of their governance platform and all that. Thanks a lot, Dhanusha, for joining us this evening on the show as well. Dhananath Fernando, nice to have you always on the show. It's always a pleasure talking to you. You've been coming on the show many a time and giving your insight as to how Sri Lanka should reform itself. One question to you, Dhananath, before I go. I remember President Mahinda Rajapaksa addressing his constituencies, asked a question in Sinhalese, then Lunu Labada. Now I'm asking you a question. Pol Labada, Ha Labada, then Saturuda, Dhananath.
I would say Satutu end one nang get to the growth story.
Thanks a lot, Dhananath Fernando, for joining us this evening. Dhananath is the CEO of Advocata Institute. Thank you very much, Shihar Raniz, independent journalist, as well as Nadim Majid, for joining us this evening on Face the Nation. A few key highlights from President Anukumar Dissanayaka's speech today. Increasing the tax-free threshold and widening of personal income tax slabs from April 1st, 2025. Imputed rental income will not be implemented. 15% tax on service exports from April 1st, 2025. VAT on digital services based on consumer jurisdiction from April 1st, 2025. Removal of import restrictions on motor vehicles. Stamp duty on leases to be increased to 2% from January 1st, 2025. And also increasing Sri Lanka's reserves by 2028 to 15.1 billion US dollars. I leave you tonight with a quote, as I always do. Promises are the sweetest lies. Take care and good night.